Alrighty, good afternoon. Welcome back here to Trader Minute. Great to have you aboard. Again, I apologize for my voice. Thanks for bearing with me here today. Let's take a look here. Market is up pretty good, depending on where you look at it. I want to kind of look at some of the dynamics here. One of the things you'll see that I have up here is this little chart just kind of showing about the NYSE and just showing what the various stocks on the New York Stock Exchange are doing. Okay, and what I'm interested in is what's up here, the number of advancers versus the number of decliners. We have 1,400 advancers, 1,200 decliners. You say, well, okay, yeah, we'd obviously have more advancers than decliners on an up day in the market. But what's a little startling to me is that this number isn't skewed more. Most days where the market moves up 1%, you're generally looking at 1,000 or more advancers than decliners. And right here, we're only seeing a 2 to 300 discrepancy. There's a interesting indicator here on stock charts called the NYAD. It's $ NYAD, and it looks at the advancers versus the decliners. And the theory here, in fact, let me get the indicators off, because if you try to map an indicator onto this and try to make any meaning or reasoning out of it, there isn't any. But the whole idea behind this here with the NYAD is that when there's more than 2,000 advancers versus decliners that day, that's a really aggressive bullish day. And on the bearish side, if there's more than 2,000 on the downside, that's a more aggressive bearish day, almost to the point of oversold, to where you're likely to have a snapback. In fact, one of the reasons I wasn't hesitant to go put a put on yesterday is because we weren't in that exhaustion area. But one of the reasons why, or one of the things they should give in general market call buyers a little hesitation here today is this NYAD, is the fact that the market's up over 1%. And really, the difference between advancers and decliners is very small. And so while, yes, the market numbers are up big, it's not because there's an overwhelming amount of stocks going up. Why is it happening? Well, it's the banks, okay? And we've talked this story here several times today. It's the banks. It's the change and what has happened here in the banks today, and really sparking a pretty strong uptick here in the banks, mostly the regionals, but even the regular banks, a very nice spark. At the same time as the banks are moving up, the home builders are down. Okay, the home builders are down. Interest rates go up, and generally what we see is money runs into the regional banks and out of the home builders. Interest rates go down, money runs out of the regional banks and into the home builders. Okay, as far as the home builder index goes, the XHP and what's going on here, the home builders are just being slapped around right now with kind of a changing environment. We're seeing a little bit of erosion in housing data. We're seeing, you know, Europe say one thing. We're seeing different things come out of the U.S. Taper, not to taper. Some of these questions have just continued to loom large. But when it comes to what's going on with the housing sector, there's kind of two ways to look at it. If you're looking at the XHB, you have to keep in mind that Lowe's and Home Depot are major components of it. And in fact, the action in Lowe's and Home Depot is one of the reasons why the XHB, remains much lower here today. There's another way to look at housing, and that's with the ITB, the Dow Jones U.S. Home Construction Index. You'll see that's down pretty good here as well, almost 2%. Okay, look at this chart. Okay, this chart has a lot of similarities to gold, A lot of similarities to precious metals. And right now, there's no major move going on. There's some really good support just south here around 21, 21, 25. There's some pretty hefty resistance up here around 23. And to see the home builders consolidate November, December, and into January is probably what we're going to see. Okay, they're going to have their ups, they're going to have their downs, but really consolidation until something changes. Okay, nothing is really changing overall. The data's lukewarm. We still have the government issues. The Fed's pretty much on hold, until Bernanke, gives up his reign in January, and so there's not a whole lot of major catalysts out there. Obviously, you know, to see it come down to support, sure, and there are individual names like Lennar. Okay, let's take Lennar here from a chart standpoint. You could argue Lennar's coming down to this 33 support. Okay, coming down to this 33 support level, you say, well, we have the downtrend, we bucked that, we're coming down to 33 support. Okay, let's buy Lennar, big volume coming in today. Maybe you get a bounce. I'm not going to argue with somebody who wants to buy Lennar here on support. Now, is there a chance support breaks? Absolutely. And if support does break, if we start to trade next week below 33 and eventually break 32, you're probably looking at Lennar going down another 5-6%. Okay, so some of these individual names down near support, but threatening, threatening to break even lower. Beazer is held up well. In fact, if I were to go buy any of the home builders out there, Beazer would be the one that I would want to be in. As far as upside potential, overall outperformance, technical aspect here, Beazer would be the one. So, overall, there's a little bit of difference. You do have stocks like Vulcan Materials here, in rather bullish modes overall. MLM kind of jumping all over the place, consolidating. You look some of the lumber like Weyerhaeuser. You can make a good argument to be a buyer of Weyerhaeuser today, after some of this pullback. But overall, there's a lot of mixed signals. There's a lot of potential for consolidation. And to have a strong directional bias for the sector in general, a little tough. Home Depot, Lowe's will come out with earnings here later this month. Those will be interesting, but that's kind of my thought on housing. If interest rates continue to climb, housing will continue to go lower overall, but I'm not convinced interest rates will continue to climb. I mentioned to you earlier that I would get a call from my uncle, who's a mortgage broker here today, because rates shot up. Right, he tends to give me a ring whenever rates are climbing, and he gives me a good peek of what's going on in housing. And last week as we talked about it, one of the things he mentioned to me was we've seen all the hedge funds and everything else come in and buy up blocks of housing and kind of inflate the market a little bit. And in our area here, he's not seeing tremendous growth from a housing standpoint. He's actually seeing a lot of declines relative to what we saw back earlier in the spring. And some of that's seasonal. Some of that is, is regional. So I don't take that to say, well, this is what's happening all over the place, but it is a small token of what's being seen out there. Let's take a look at our positions. The TLT, as I mentioned earlier today, I'm not going to sell it, right? I'm just going to keep it. If you want to sell it, sell it. There's a couple pennies left in value of it. It's the final trade of the last challenge. But on the website here this weekend, we're going to close it out so that we can publish the results of the last challenge and start fresh here. That way, those coming in for the next challenge, they can see that, hey, this current challenge hasn't worked. Obviously, we want we want our results to be there so people can make their decisions based on those. but we will be kind of closing that out from a website standpoint in my account. I'm just going to keep it and whatever happens with it. We're going to do the same thing with ABX here. ABX might may pop here. It's a very interesting candle on ABX. Don't know if it means a whole lot there with ABX. Then been asked about silver overall here today. There's not a whole lot of incentive to close it here. There's a little value left, and if we're going to, and if we can close it, we're not going to get very much. Uh, but with silver, we do have these real big up days, these anomaly type days. Maybe we get one of those next week, maybe we don't, but we'll keep it in there. Aren't going to pull that off. So uh, until we start to see entries or any activity in those, we won't talk too much about them. But if we start to see some movement where they're addable or tradable, we'll potentially go after a little bit more of them. Let's take a look at our two positions we have on the board right now. Capital One, okay, which has underperformed the financials today. It's not the same kind of financial stock as a Zions Bank, a regional bank, or even a Bank of America. It is pretty much trading, trading right where it opened yesterday. It's off of its highs here today, significantly. Went up, tried to test 70, coming down here to 69 and a half. And really, in a short term standpoint, it's kind of in the middle of no man's land here at 69 and a half. A break below 69 would be extremely bearish, and a break above 70 would be extremely bullish. And so, we're going to hold this over the weekend. We'll still use our 70 stop area, and we'll run here with Capital One. MGM, it's kind of done something similar, right? It went up, kind of has come back. It's pushing higher a little bit into the close. A day like today where the market's up, you tend to see, some of the buying kind of come in the last half hour. That has been the tendency here. But MGM right here at 19, you'll notice no volume at all here with MGM. Still below the 7-day moving average, still below our stop. And overall, we still have all the bearish triggers. A move above 1925 would erase some of those overall here. Okay, so that's what we're looking at. Carl showed you his top three here. Some really good stocks, some really interesting setups. We talked about going if he wants to go after any of those. And one of the things he said to me is the problem with today is it really kind of it looks a little bit like a sucker rally. Um, Not that it can't go higher, right? And we've seen these little rallies go higher, but without really building or overcoming all of yesterday's losses, it's a little bit suspect. A small gap down Monday could bring a heavy dose of selling into the markets overall. And so with some of those, we'll kind of take a look Monday instead of adding additional risk here over the weekend here on those positions. Okay. Again, we're going to kick off Education Week on Monday. Monday, the schedule will be on the live trade seat here. Monday, our first class will kick off after the market, after the trade. We'll run it at 4:30 Eastern, and again, those will all be recorded. So for those of you who are interested, those will be in there for you. Again, the whole design of those is to take some of those that don't have a whole lot of option knowledge, get you comfortable with what options are, what the ideas are, how people use them, how we use them here at Trader Minute, and kind of get you rolling into the launch of the next challenge, which will kick off Friday the 15th here next week. So, all right, any questions here? Let us know here, Jeff at TraderMinute.com or Carl at TraderMinute.com, and happy to help you out. For the last 10, 15 minutes, I'm just going to stay on chat on the video here. I see a couple emails rolling in asking about a few stocks, and I'll give you some of my thoughts on them as you would like. Let's start with Simon Property Group. Okay. Trend Rider Bear Signal on Simon Property Group. I believe this was one of Carl's top picks yesterday from a bearish standpoint here on Simon. The rise in interest rates really hurts these commercial real estate stocks. Here's the commercial real estate ETF, the IYR, and the rise in rates really crushes them. And if rates continue to climb, we're going to see the IYR go to brand new lows, and stocks like Simon Group go to brand new lows. If you take a look at Simon Property Group in a longer term, okay, we're talking about a long-term upward trend that has been broken and now it's had a relief rally and breaking back down below the 7-week moving average again while triggering a trend rider bear signal on the daily chart. There's just nothing bullish here. Its only hope is that rates come back down. But if we continue to see rates climb, some of these commercial real estate stocks are going to get hammered. By hammered, I'm talking 30 to 40% downside over the coming 2 to 3 months. Okay, regardless of earnings or anything else. Okay, these things are based on interest rates. Simon Property Group is one of the weakest out there. Vornado and some of the others that they're actually holding up okay. If we look at the ETF in general, the IYR, you see the breakdown. So this isn't kind of across the board, but some of these like NNN, okay, National Retail Properties. Just take a look at this. The big breakdown here from May to September, relief rally, interest rates now moving back up. Big breakdown again here. We're likely to have some serious follow through on these. And these are companies that their earnings aren't any better than what they were 3 years ago. The only reason Triple N has gone from 20 to 40 is because of interest rates and this kind of mass migration into these commercial real estates. We're starting to see a migration out of them, and to see these things get hit 30 to 40% over the coming 2 to 3 months would not be very surprising at all. Macerich is one of my favorite to play in the group over the years. And so Macerich here, you can kind of see it having the little exhaustion move up to 70, continuing to make lower highs and lower lows and forming into a downward trend that the stock market itself can continue to go higher and these would continue to go lower. Okay. SPM, is Walgreen too far below the 7 for any upside hopes? Not at all. Absolutely not at all. Walgreens does suffer a little bit from from some of the commercial real estate action that's going on. Okay, so with the commercial real estate, Walgreens just owns a bunch of stores, so in some aspects, they're a little bit of a commercial real estate company. Okay, but they have earnings and they have earnings growth going on. And what's happening here is Walgreens has just made another leg higher, and it's now in a consolidation mode. This is why I don't look at the 7-day moving average on Walgreens and say, hey, there's something major here, or it's screaming trouble. Because notice how the Bollinger Bands are contracting. And when you're in a contracting period, you tend to see a bunch of bounces around the 7-day moving average. Do I think you have a lot of upside in the short term on Walgreens? I don't. I think you're probably going to be looking at a stock that bounces between, 57 and 61 over the next month. Is probably what you're looking at before it decides which way to move next. But you're probably heading into a consolidation mode for it. And if you get any bounce on Monday, you're probably talking about a stock that you could possibly sell up around that 61 area. But anytime something is in a consolidation mode like this, the danger is just a little bit higher for both calls and puts. U.S. Steel. Okay, Carl talked about U.S. Steel a little bit here. We talked about U.S. Steel on Wednesday with some of the bearish engulfing action that was happening. We talked about why that bearish engulfing was kind of ridiculous to go short. Okay, uh, as it being a solitary signal, and compared that to some of the other signals that were out there. And now you're seeing some of the money fly back in here and push back higher here on U.S. steel. And this is happening kind of across the board within the steel sector. Nucor, AKS, which for those of you who are very bullish on the steel sector and are looking for the most upside, AKS may have some of the most upside because of how much it's shorted. So AKS, I wouldn't mess with Vale on the upside. There's some yes, it's steel, but it's not one I would mess with the upside from here because of yesterday's action. But then you have something like Metro Steel, okay, which is actually breaking lower in the midst of this. Okay, uh, you have uh, you have MT, okay, moving higher. So not everything in the group is moving in the same direction, but some of these steel companies that are more domestic here for the U.S., U.S. Steel and Nucor, they continue to be very strong. Alcoa here was asked about Alcoa, getting long Alcoa. I have trouble wanting to get long Alcoa. I'd rather get long U.S. Steel from an overbought position than than get into Alcoa uh, here on the upside on this pullback. Uh, you know, Alcoa got knocked out of the Dow. That's actually kind of helped it to rally a little bit, but as it's going to become more of a trader stock than an investor stock. But I don't see anything in Alcoa that's highly predictable from this point. Could you play today's Dragonfly Doji and you put a stop on 875 if you want to get long? Sure, you could. Okay. PW, any thoughts on bond ETFs? Um, as I've looked at them, not a whole lot. Okay, not a whole lot. Market's pricing in taper. It's fully expecting a taper. I personally, I fully disagree. I don't think we're going to see a taper. I don't think we'll see a taper in 2013. Don't think we'll see a taper in 2014, and I frankly don't think we'll see a taper in 2015. I don't think that there are incentives to take it off. And all the incentives actually point to go the other way, in my opinion. That's an opinion. Okay, so if I don't believe in taper, I'm obviously thinking TLT is going to go up. I'm not buying TLT here. Absolutely, there's no reason to buy TLT here. If you're looking to trade TLT, it's probably on the short side at this point. But I don't find it in a great position to I don't find it a great position to say, oh, here's TLT right here. We can buy it. A stop here. The trade set up. It's broken some of this little retracement rally that was starting to happen, breaking back below the Fed beige book levels on the news here today. It's a little tough there. One way to play interest rates going higher, you can buy TLT puts or you can buy calls on TBT. Okay, you can buy calls on TBT, which is the ultra short treasury ETF. Okay, TradeHound just got into MGM. Yeah, same stop point here on MGM, 19 and a quarter, right? I mean, there's not a lot of risk here left in it, from a in 1925 stop area. We're talking about a quarter risk here, obviously with some gap risk, but yeah, 19 and a quarter is kind of that stop point. Notice very little volume today. You know, Typically that means the rally isn't worth much. Very little volume in Las Vegas Sands, very little volume in Wynn. on the upside, and they're all kind of the same thing. They haven't erased yesterday's bearish triggers. They've just kind of had a sympathy bounce here. Could that turn into a strong bullish bounce? Yeah, it could. And if they start to move above yesterday's highs or Wednesday's highs, that would that would absolutely show it. S Jeff, where do you look for how many shorts are in a stock? Yeah, there's several places. The exchanges publish that on a monthly basis. Okay, the easiest place that I find is finviz.com to see something like that. So you can come in here. You can come in here and say, all right, let's take MGM for example, right? And you come in here, MGM, scroll on down, and all the way over here on the right. I'm not sure if it's on your screen. Let me hit Control 1 and zoom in so I can get it on your screen. But it'll say shares outstanding, shares float, short ratio here. Okay. Okay. The short float here. This shows what percentage of the shares are being shorted. So out of 3.7 million or 370 million shares, you have about 5% short. Okay, betting on the downside. That's quite heavy. Okay, now if you take a look at a stock like Caterpillar, it's a Dow Jones Industrial Average stock. You're talking about a 4% short, which is absolutely huge for a Dow component. Okay, but then you compare that to even something like a First Solar, which is 16% short. Okay, 16% short. Or I mentioned AKS, okay, AKS Steel, which is 25% short. So 25% of the shares are being bet on the downside, and that's pretty huge there for the short float. Occasionally, you'll see stocks that are above 50, which technically is impossible, but occasionally happens. Okay. Yeah, Wick, shortsqueeze.com as well. Yep, shortsqueeze.com is a website that will publish the data. You can even go to the Nasdaq and get the data as well. But shortsqueeze.com will give that to you as well. Heck, even Yahoo Finance or Google Finance, they'll give you the data as well. Okay, JC. Someone on with an acoustic guitar in the background. Yeah, my voice is about done. It's about fried here, so don't quite have the same vocal here. Glad it's relaxing. All right, yeah, mid juleps all around. Cricket. Uh, our shorts both long positions and what do you mean by LPs and SCs? Trade hound, sorry. Must be getting late in the day. Those abbreviations aren't registering right now. LPs and SCs. You talking long puts and short calls? Then maybe, but like a short position, right? You don't necessarily know what else. I mean, are they really bearish the stock? So if you're short AKS, 25% are short AKS, right? Well, are they really bearish on AKS, or is a fund manager going out and buying a heck of a lot of U.S. steel and shorting AKS and basically saying, you know what, I think steel's going to go up, but just in case steel comes down, I'm short AKS to kind of balance anything out. They're kind of doing a combo position. So anytime you look at data like that, you can't just assume, oh, 25% short, that means they're ultra bearish, right? You can't quite do that in today's market. Shorts are shorts, both long puts, short calls. Yeah, I mean, short, whenever you use the term short in the market, that means they have some sort of position on, whatever it might be, that will appreciate in value if the stock price goes down. Okay. And when they're long, when a trader uses the term long, that means they are benefiting from any appreciation in stock value. Okay, so however, you can have a long position that involves short puts and or a whole bunch of different puts, but you're actually long the way you managed all those puts. And with the options and some of the other financial instruments in the market, as we know it today, it's a lot more convoluted than it was even 7, 8 years ago. All right, so into the close here. Okay, into the close. We're seeing the market go set a new high here. Uh, Take a look at this from a weekly standpoint here. Let's just here's a 1 hour chart of the market. Okay, a nice gentle hasn't moved for 2 weeks, right? Okay, right. Not quite. Take a look here where the market's going to end today. It's basically ending right back where it opened yesterday. Okay, right back near where it opened yesterday. Right back in that same area, and you're seeing a little bit of melt up here at the close, which is very normal for a low volume Friday that's been bullish pretty much all day. You're seeing some of that buying flush in here. Another stock, Tesoro. Okay, talked about Tesoro yesterday. Wouldn't short Tesoro. Overall, downward trajectory of oil benefits Tesoro. The action here in early October, very bullish. We've now consolidated. We start to see Tesoro on Monday trade above 50. Fantastic upside entry to play this up into the 55, 57 area there with Tesoro. Same thing with Marathon. Okay, Marathon broke 36 2 days ago. With yesterday selling, broke back below 36. Today closing above 36. We see a little strength come into Marathon Monday morning to play this breakout here would be very bullish. So for me, Marathon and Tesoro, kind of the top two upside plays that have potential Monday if we see a little bit of strength come in on Monday morning there. Okay. Yeah, Tradehound. Short calls is basically you're selling a call. So really, your value goes up if the stock goes down if you're short a call. Um, in that case. All right. Well, thanks for hopping on. And look forward to some of the things that are rolling out next week, getting off to a brand new challenge. And please, any questions, let us know. Have a great weekend. We'll talk to you later. Take care.